I want to go to Chicago and find out what's going on the grain trade here. We have Scott Gecas standing by. He is with Walsh Trading, and he joins us right now. Had a weaker start to the day today. Are you seeing follow-through?
Not yet. I mean, we have there's a lot of news today going on with the FOMC and all that stuff moving forward. We're looking forward to next week's crop report. So that's definitely going to be in focus, but pretty much everything is still focusing on the weather. We have about 2 to 4 inches in the next 7 days with a little bit in a 14-day forecast. It's going to be a little bit drier. So, and warming up as well. So we're going to see how that is really going to play out going into next week. But option volatility, you're seeing two-sided market. Volatility is pretty much elevated across the board just due to that report next week.
Corn market a little bit weaker today. Let's take a look at where we now stand. We start with July corn. Currently, we have July corn 2 1/4 lower. We're at 447.5. And the new crop corn is now down 4.5 cents. We're at 458.5. It just really hasn't changed too much from where it has been in the overnight trade. On the other hand, you have the soybean trade that has come up to only about a penny lower now, and July is at 912.5. That is actually about 7 cents off its overnight low or early morning low, and November at 938.5 would be about 7 cents off of its earlier low. It is down 1 3/4 right now. The wheat market continues to struggle here, though, and in Chicago, we are down 8 cents on July at 523.5. Likewise in Kansas City. The pressure continues, and we have July down 6.5 at 458 3/4, and in Minneapolis wheat, we have July now down 8 3/4 at 543.5. What's going on with the wheat marketing these days here, Scott? Are you hearing much in the way of any option plays or anything in the wheat trade?
There really hasn't been any too big of blocks with the option trade in the wheat market, at least not enough to make note of. But, the wheat market is all over the place. So we have all the wet weather in the U.S. We have dry weather in the Black Sea area. It's causing stress on the growth area in that aspect. So U.S. demand is slightly off, and that's why you're seeing a little bit of weakness in the wheat market.
Wanted to take a look at the cotton market, too, before we get into our break and see where we now stand on that. Cotton is higher today, and we have July now quoted 43 points higher. We're now at 65.75, and now 65.66. So it's 34 higher. December now changed to 67.36, and that would be up 54 points on the day. That's the latest on our crop markets, and we'll come back here in a moment, and we'll talk with Scott Gecas about our livestock trade right after these messages. Come on back. Scott Gecas is talking with us, and he is with Walsh Trading in Chicago, and we're going to take a look now at our livestock trade. Scott, join me as we take a look at our live cattle futures, and right now we have the August contract quoted 27 lower. We're at 105.28, and we're exactly $0.50 off our earlier high this morning, when at that time it would have been about 25 cents higher. Now, October live cattle have turned down 33 cents. We're at 106.72. And when you look at the feeder cattle side of the equation, on the feeders, we're lower there too. We have August down 20 cents at 137.05, and September down 20 at 137.40. On the cattle side of this equation here, Scott, when you look at the corn market under so much pressure the last couple of days, some analysts thought maybe that would give a little more of a boost, especially to the feeders. We're not really seeing that yet. Why?
No, you're not seeing that at all. And, everything is right now we're going to be focusing on Friday's report. The cattle on feed report is going to be the main focus moving forward. So with all the wet weather and everything like that, we have weak seasonal demand. We expected seasonal demand to be picking up at this point in time, and is not. So that's one of the biggest deterrents right now, and that's why we're keeping an eye on that 105 level. That 105 level is going to be the key support and resistance level. So we're going to stay bullish above 105, a little bit bearish below it.
Okay, now let's look at our lean hog market and get you updated on things here. So on the lean hog trade today, we have definitely turned the corner higher, and we have the August contract now at 83.05 per hundredweight. That happens to be just one tick off of our high of the day. Look where we had the low. 80.92 was the low on that August contract today. So we're well over $2 above that now, and we're up $1.35 from our close yesterday. That's a bit of a big-time reversal there. We have October now 93 higher at 77.53, and that is also about $1.50 off of its earlier low this morning. So a big turnaround in the lean hog trade. Any word on what caused that today?
The lean hog trade, I mean, just fundamentally with all the news and the African swine fever, I mean, we have a lot of upside built to the whole complex. So you're seeing a lot of upside calls, but, China continues to buy even with those high tariffs. Now we're looking for Mexico to start their import campaign. But until that happens, we're expecting prices to at least stay steady or to a little bit higher. We really don't see too much to the downside. But that 80 price level is going to be our key support.
You bring up a good point about the Mexican tariffs. Now that they have been avoided, at least for the time being, do you think they're going to take advantage of that and come in as a big buyer in tomorrow's report?
Well, we're going to see. Again, it's all about that headline risk. I mean, with the president and his tariff campaign, I mean, all he has to do is say one tweet and the tariffs are back on and everything goes awry. So it's all due to headline risk. But if the tariffs stay away from Mexico and we see a big build in exports to Mexico, I think you're going to see a little bit of a ramp up.
Okay, well, thank you, Scott, for talking with us. Always a pleasure. Appreciate it. Scott Gecas happens to be with Walsh Trading. He's located there in Chicago.